Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Monday, April 29th, quickly wrapping up another month here, heading into May here shortly. Today, we're going to take a look at Google, and this is not one I've covered in the past because it was not paying dividends in the past. It just recently announced they will start paying a dividend, so I thought we would take the opportunity to take a look at it. And unless you have lived in a rock or a cave somewhere for your entire life, you know what Google is, right? It's a search engine. YouTube that you're watching right now is under the Google umbrella. The way you can send emails. I mean, they have a lot of products. We'll get into that. But Google, you should all be well aware of. And we're going to take a look at this one today. This is out of the information technology sector. Let's jump right in. And if you would take a moment before we get into the video and help me out, hit that thumbs up down below. Let me know if you find value in the content. Drop a comment down below. Let me know what you think of the video. Make sure you hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. Doing that really does help get the word out. It helps with the YouTube algorithm, and it helps to spread the videos to more people. The more you do that, the better for me. And for those of you who have taken the time to hit the subscribe button, hit that notification bell, hit that thumbs up, and drop a comment, really do appreciate it. And for those of you who haven't done it, do it right now. Hit the subscribe button, hit the notification bell, hit that thumbs up, drop a comment down below. Thank you for that. Really do appreciate it. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. If it meets 5 of 8, or if it's a bank, financial company like a bank, 6 of 9, then it goes on my watch list. I do more of a deep dive into the financials, do a discounted cash flow analysis on the stock, and find out what price I'm willing to pay, and then wait for the price to align with that stock if I want to add it. It's also how I look at companies already in my portfolio, so see if they are still meeting my investing criteria. And just because I am talking about a stock and we are going through this does not mean I am investing. Even if it makes it through the screener, that doesn't necessarily mean that I am investing in a company. I like to keep under 40 stocks in my portfolio so that I can keep an eye on them. And this is also how I set up the stock pick of the day video. So we're going to run through this criteria on Google here. Now back to Google. If you want to know more about this company or to use their search engine, go to www.google.com. That's www.google.com. That is their, I won't call it their homepage. It's really, I guess it is their homepage, but it is really where you start out for like using their search engine. And what I did was I clipped out, this is not all of their products, but I clipped out a lot of their products again. You are probably well aware of, and you definitely if you're watching this video on YouTube, you're definitely aware of a lot of their products out there, right? That Google Wallet, Google Workplace, Groups, Keep, Nest, YouTube, obviously YouTube TV, YouTube Music, YouTube Kids, YouTube that we're on right now, Google Sheets, Google Sites, Podcasts, Scholars, Google Search Engine, which is their main bread and butter that they started out with. Android Auto, Android TV, their calendar, Chromebook, drawings, family. You can go through here. There's a lot of them. Google Flights, Gmail, right? So you are well aware of all the products or some of the products, I'm sure. And I'm sure Google Fit. For those of you out there working out, maybe you use Google Fit, Google Cast, Google Alerts, Google Forms, a lot of different Chromecast, a lot of different products out there that they make. Our mission is to organize the world's information and make it universally accessible and useful. And they are, again, out of the information technology sector, and they are really anything information technology based. I know they have some Google phones now, Google wearables like the watches out there. They are competing with companies like Apple for some of the devices and wearables. I think Google has an iPad now or similar. I don't think it's called an iPad, but their version of the iPad. So again, a lot of products like that, as well as their suite of products, online products and information. The Google search engine being probably the one that most everyone's well aware of beyond YouTube. And maybe some of you didn't realize YouTube falls under Google's purview, but it does. Now, the reason we're taking a look at them, down 3.33% on the day, we are talking about Alphabet Inc., ticker GOOG, and there is another Google, like I think it's GOOGL. So we are talking, I believe that's the A shares. I believe the GOOG is the B shares. I think the only real difference there is one gives you voting rights, one does not. I believe the A shares, which is GOOGL, gives you the voting rights, and GOOG does not. I may be wrong on that. I did not do that deep of a dive on this one. So correct me if I'm wrong in the comment section down below. Maybe it's switched the other way. Maybe it's GOOG that's the A shares that give you voting rights. Maybe it's GOOGL that are not. But we're going to look at the GOOG shares. Again, down 3.33% on the day. Closed out the day at $167.90. Looks like they're down a little bit further in the after hours, at least as of 4:44 whenever I pulled this information. 52-week range as low as $104.50, as high as $176.42. So they are closer to their 52-week high than their 52-week low. And kudos to those of you back here in the $104 range that were buying them. You've seen a nice run up over the last several months. Market cap of $2.076 trillion. That's right, with a T, trillion. Beta of 1.05, so they are just slightly more volatile than the overall market. PE ratio, $28.95, and typically I would call this overvalued, a high PE. But for a company like Google in the information technology sector, it is not uncommon for them to have a high PE in the high 20s, mid to high 20s. Obviously, I would like this closer to this 104, and that would be a much lower PE, but this is not outlandish for a company like Google. Earnings per share, EPS, sitting at $5.80 per share. Looks like their dividend date is going to be June 17th. They don't have an ex-dividend date listed yet. They don't have it listed there either. But earnings date was April 25th, so you just missed that last week here. 1 year target estimate, at least according to Yahoo Finance, where I'm pulling this information from, $166.05. So they actually say it needs to come down a little bit more, right? If you were to buy them now, they feel like it's a little, at least according to Yahoo Finance, they feel like it's a little overvalued where it currently sits. Now, typically we would look at dividend yield theory, right? We'd look at their 5-year dividend yield average, but since they just announced a dividend, that one is not applicable here. They just don't have 5 years worth of dividend payouts to look at. So we're going to skip that. Their dividend payout ratio is not listed as well. It says 0.0%. That is not correct. It is very low, but it is not 0%. And I guess technically it is right now because they haven't paid out a dividend yet. So in June, maybe we'll revisit this one. Maybe in July, give them a little bit of time, and we'll see how that dividend impacts them and where these numbers shake out. But we can go back and look at their free cash flow. Going back to 2020, we're going to see $42.8 billion in free cash flow. 2021, $67 billion. 2022, $60 billion. Looks like a bit of a drop there from 2021 to 2022. 2023 back up to $69 billion. So overall, nice free cash flow growth. Repurchase of capital stock here. They're repurchasing their own shares aggressively. And even though it did look like there might have been a little drop here from 2021 to 2022, you can see they increased from 50 billion repurchased shares to 59 billion. So that would more than account for the drop in free cash flow. So again, nice growing and even up more in 2023. Nice growing free cash flow as well as growing their repurchase of capital shares. So I like that they're repurchasing their own shares, and I love that their free cash flow is growing so steady. Now we're going to jump over to stockanalysis.com, and I recommend on this channel you look at more than one source for information so you can make sure the information you're getting is accurate and up to date, and pick any sources that you like. These are just two that I chose. You can pick any sources that you like. Just don't blindly follow just one source. Sometimes sources can have wrong information. Sometimes that information takes the time for them to update. Choosing two, if not three, make sure that you're getting the correct information. One can back check the other, and if not three, that's what I say. At least two, though. Now, they have 36 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $121, which would be a 27.93% decrease from where it currently sits. Average estimate, $155.69, would be a 7.27% decrease from where it currently sits. And I would say anything under the 150 range would probably be a good range for this one. I have not done a discounted cash flow analysis. Obviously, if you could get it back down here in the 120s, that would be much better. Down in the 100 where it was at their 52-week low, even better. But for me, I'd have to do a discounted cash flow analysis, but it just seems like based on where they currently sit, 167 being a PE of 28, if you could get them under the overall market's PE, which is around 23, for a company like this, in my opinion, that would be a good buy-in price, especially if you're going to hold them long-term. And that should be your goal, holding a company long-term, not buying it, looking for a quick profit and then selling it, or buying it and then it goes down and selling it. Definitely don't do that. But if you're a long-term holder of this, I'd say under 150 would be a decent buy-in price, though I'd have to do a discounted cash flow analysis on it. High estimate of $185, which would be a 10.18% increase from where it currently sits. Now, we are going to get into statistics here, look at financial efficiency. To do that, we're going to look at return on equity and return on invested capital. I like 10% or better for both of these. Return on equity here is 29.50, smoking high. Very good number, almost 3 times what I look for. Return on invested capital, 24.97, same thing. Very good number overall. EPS growth, I like 5% or better. 17.77% forecasted over the next 5 years. Very high earnings per share growth forecasted over the next 5 years. Same with revenue growth. Double-digit revenue growth, 10.46%. Very good numbers overall for this company. Again, I'd like to see them just pull back a little bit more. Now we are going to take a look at their dividend stats here. Again, they have not started paying out a dividend. June will be their first dividend payout, right? They're going to pay 20 cents. Looks like they're going to, ex-dividend date's going to be on the 10th of June, and their pay date is going to be June 17th. So record date, ex-dividend date will be June, ex-dividend date actually will be June 9th, record date June 10th, and payout date June 17th. 20 cents is going to be their starting dividend payout. Quarterly payer, says they're going to be a quarterly payer, so must be on that June time frame. What is that, March, June time frame, I believe. Excuse me. Payout ratio is going to be 12.27%. Dividend growth is not listed yet, so hopefully they have significant dividend growth. Buyback yield 2.92%, shareholder yield 3.4%. Overall, again, Google is a very, I wouldn't say it's super fast growing company, but fast growing company. The internet's not going anywhere. They do have definitely a moat, I would say. Their branding, you know, whenever people say Google it, I mean, you're literally telling people to look it up using Google, even though they might not even use Google to look it up, right? Google it. That's pretty much a common saying everyone knows, to go look something up online. So they've branded themselves very well and got in on the front end. And again, so long as that Google it saying is out there, so long as YouTube is out there, this company is going to be around for a long time. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And let me know what you think about Google. Drop it in the comment section down below. Again, just recently announced that they are going to be paying a dividend. I believe Meta announced here in the last year as well that they were going to be paying a dividend. So add them to the dividend club. Hopefully, again, their growth is consistent and they have nice, I would like to see double-digit dividend growth based on their free cash flow. Nice steady free cash flow with a very low payout ratio. If it's only in the 12% range, it'd be nice to see at least double-digit dividend growth, but we'll see what they end up with. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Google you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk against your money. You should never invest any amount in a account for losing. Always do your own research, invest based on your situation and circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.